Hi everyone, and welcome to Philanthropy Impact's Walk in My Shoes series for professional advisors. We are back after a short break after the summer, and what better way to start than by revisiting the discussion around managing in this unprecedented time and what it means for the advisory space, this time 18 months later. My name is Zofa Sahanik, and I'm the Director of Membership and Development at Philanthropy Impact and also the moderator for this series. As this is the first event in our autumn-winter programme, we have opened this session to non-members, so welcome also to our new audience today. Just to give a little background on us, we are a not-for-profit membership organisation with the mission to increase and improve philanthropy and social investment and to encourage impact investing. We work specifically with professional advisors, the ultra and high net worth clients, on improving their service offer in this area, offering a range of events, training and publications. This online series is carefully curated to bring members concise, topical and informative sessions to help them navigate the philanthropy and impact investment space on a regular basis. If you'd like to know more about what we do and the benefits of membership for you and for your firm, then please do get in touch with me. My email will be in the chat or at the end of this recording for those on YouTube. This is a strictly 30-minute session and it will go very quickly, but we do try to encourage audience interaction. So please use the chat to introduce yourselves, have your say and pose questions to our panel. Please make sure to select panel and all attendees when posting in the chat so that everyone can see. And now it's time to welcome and thank our chair for today, George King, who is a partner at MASECO Private Wealth. And joining George for this valuable discussion, we welcome Rennie, Hoare, partner and head of philanthropy at Hoare & Co, and Alana Petraske, partner at With Us Worldwide. Thank you all so much for coming and joining us today. And I'll now hand over to George to make us start. Thank you so much, George.
Sophia, that's impressive. I'm not sure you breathe through that whole thing, but you get an immense amount in like a minute. That's incredibly impressive. And while I do hope this is informative, unfortunately it is concise. So we will jump right in because the half hour will go quite quickly. So welcome to everyone. I haven't looked at the list of names who have joined us in the last few minutes, but I know there's some familiar names in there. And we've been having versions of this conversation, of course, for a long time. You know, what does the impact of the pandemic mean? There have been elements about what does Brexit mean? There's been quite a lot going on over the last 18 months that impacts donors and the people who are, sources of funding, whether it's impact investing or charity, that impacts organizations out there trying to do good on the ground, and the radical change in priorities that was required because of the pandemic, and then the advisory community that's out trying to actually help facilitate a lot of this, and then of course the beneficiaries, the people on the ground with needs, and what those needs and the profile of needs look like, and how they've changed. There's been quite an arc over the last 18 months, and we've talked about elements of that, but this feels like a good opportunity to come back and reassess and dive into a few of those elements a little bit more deeply. Alana and Rennie, I'll let either one of you sort of raise your hand to start first, but let me start with an open question. Just what has been your overall impression about the sort of the impact on the philanthropy, charity, impact investing sector? Has it been a net positive or a net negative impact in terms of what we've endured over the last 18 months?
I can jump in there to start. It's that net positive, net negative is pretty tricky there. Obviously, this is a super challenging situation for absolutely everybody right now, more so for some communities than others. So it's hard to come to a sort of net positive. However, I am very, very encouraged by what I see in different points, the crucial points of the sector, whether I'm looking at clients who are funding things directly, whether I'm looking at clients who are setting up structures, whether some of my clients obviously are institutions such as donor advised funds or charities themselves, and I'm seeing them respond with resilience to what is happening. The two things I want to pull out that I'm finding very encouraging in this whole challenging situation are around, first of all, responsiveness and resilience to what's happening. What I see is foundations who are open to discussions about racial justice, open to discussions about climate change, and open to discussions about loosening those binds of reporting and becoming more flexible as funders. So that to me is very promising and exciting. And the other thing that I think is promising and exciting is around people who are ready to talk honestly and openly about their piece in the sector, right? And that includes us advisors. I know this is something that I harp on about, but where we fit in the ecosystem of philanthropy. Are we helping money to move along? Are we helping a thoughtful discussion happen? So I can't say it's a net positive, but I am really, really encouraged by what I see along the whole course of the sort of philanthropy and giving ecosystem.
It's good to hear the positive. Before I go to Rennie, just to follow up on some of the comments you were saying about donors, what about donor fatigue? Is that an element you're seeing at this stage, given how long this has been going?
I think for some donors it is. I think fatigue for all of us is something to really think carefully about. We could have a whole other session on sort of professional fatigue and keeping up with, with our own sort of virtual practice. But for donors, I do think it depends very much what their initial approach was. So I have a client, for instance, that has always been focused on education and music, the arts. They did not jump on and do sort of climate change or jump on and do racial justice, but they did integrate various different things into their pre-existing mission around education and music. Are those folks getting fatigued now? No, because what they did was sort of integrate into some sort of holistic way the existing vision that the foundation had. But I do think there is risk if you sort of bop from one thing to another to feeling some fatigue around this. And it's evident, for all of us in simply following the news. There's an earthquake that's devastating in this part of the world on Monday, and then on Wednesday, we're talking about, a major, development in some other way that needs our attention. So yeah, I think there's a risk of it. I think the key is to keeping some sort of centeredness in mission and to integrating those other developing things as time goes, rather than necessarily bopping from one thing to another.
Those are some really, really excellent insights. Great. Rennie, let me get your initial impressions of the last 18 months.
I think the positive is that the pronouncements, the worries that we had right entering the pandemic haven't come to bear. So one of the discussions we're having, certainly in the philanthropy lens, was that half of the charities could fold within 12 months if there wasn't some quite meaningful stepping up and support, and that has not come through. And I think that's been a really fantastic thing, where we could have had the hollowing out, the carving out of the charity system just at the point where there was massively heightened need. So the fact we've avoided the worst, I think actually that's been a big group effort, from volunteers to donors through to people working at those individual charities. So I actually see that as a positive. I think the second thing is that so when thinking about donors stepping up and people really making sure that they can help where they can, I've seen that hugely, certainly through the lens of our donor advised fund. So in the 18 months pre-pandemic, our donors made donations of just over £40 million. In the 18 months since the pandemic has hit, it's just over 83 million. So people have doubled their effort. They've doubled the amount of things that they've gone into and helped. And this has been a lot of going to new areas. So thinking about health, thinking about education, but even those areas that had been top amounts for giving, which were the arts, the community development, those actually still received more than they had done in the previous 18 months. So we didn't see a substitution, we saw a huge quantum more. And then I think the final thing, when flipping it away from philanthropy into social impact investment, is I think a lot of the social impact investments have shown that they are non-correlated to a lot of the equity markets. And that alternative asset characteristic is very, very exciting. I think it means that impact investment has proven that it has a point in someone's portfolio from a financial side. Actually, it's probably it's had a better financial return than people expected, and people have had much more focus on those other drivers of impact investment returns, so the environmental and the social returns. So I think the last 18 months have been deeply positive for impact investment, improving that it is different from a lot of the mainstream investments.
Those are both some really positive observations that you're both pulling out, which is great. And probably this is in particular is an audience that's happy to hear some of that. Maybe let's I don't know that these are answerable questions, but let's delve a little deeper into that. I mean, to what extent do you have an impression that what each of you is describing is about an invigoration, about an actual sort of ramping up of activity and donor awareness and so forth, versus, you get a spike because there's a need, and if it's not a substitution, is Rennie saying maybe it's bringing forward money that would have been spent later, or that it simply recedes as the acuteness of the need falls off? Do either of you feel like the things you're identifying are a step function in change and improvement and engagement and money, or maybe just temporary? Hard to know, I know.
Sort of an unanswerable question, but an excellent one. I'm hopeful that there is evidence of change in approach that will be long lasting. I do feel like we're in a little bit of a revolutionary moment, a real disruption of pre-existing systems that I hope will be long lasting. I do want to make a plug for the acceleration of giving being something that is in itself beneficial. Sometimes we think of, oh, this money would have made its way always to good causes, so therefore it's not new money. Well, try saying that to a project that actually needs the money today, or it will go under. So accelerating giving to me is a positive, almost in absolute terms. And that is not just whether, a foundation, for instance, or an individual will choose to give sooner, during lifetime rather than death, or accelerate the foundations program, but also is discussions around time horizons and whether it may make sense actually to set something up that is perpetual. I definitely have clients who want to talk about what happens in 3 generations of time for the governance of this foundation. But I also have clients who are absolutely emphatically not thinking that that's the way to approach these things anymore. So I'm hoping that actually, in a strange way, that the acceleration, first of all, is a net positive no matter what, and also that there may be systems changes. It's not all, rosy, right? And I think it is frustrating to see some old patterns just, continue to persist. Sometimes I have clients who are motivated really just by sort of getting some tax relief and not putting money to the tax man, just like all of you, I'm sure, on the call have seen from time to time with some clients, but they are in the minority in my experience. And I do think that the sort of change in the tenor of press coverage of philanthropy and social investment, and the sort of additional scrutiny that those who give are getting and those who are wealthy are getting right now, does mean perhaps that we will see a shift for the attitude and approach that perhaps younger wealth holders will have going forward. So I think I think we are actually at a very pivotal moment. I think it's incumbent on all of us to try and shift those systems in a way that we think is beneficial, because we're part of it.
I'm going to come back in a minute to some recommendations from each of you about how people can do exactly that, about how, given the heightened awareness, given the heightened activity, given more money, more going on, how people that aren't involved might get themselves better at being involved, whether they are on the donor side or advising donors and so forth. I'll come back to that in a minute. I wanted to reiterate the point you were saying a second ago about so from an investment guy, time value of money is a real thing, right? So money invested now is much more valuable than money invested 3 years and 5 years later. The time value matters. And I like what you were saying about acceleration, not just because, if you're solving a problem, but the fact that the problem exists less or not at all tomorrow matters. Not that you solved it over 5 years, so you can solve it today, as well as things get more acute over time. So I love that theme you were talking about acceleration and some real value around that. Rennie, sorry, I was cutting you off.
Well, one of the things that I've seen and is quite an interesting additional strand to it is this awareness around social impact investments means that once money actually gets into a charitable trust, into a fund, people are making it do good and work whilst it's there. It's not just the grant where there's power, where there's that ability to change. it's actually in the investment side as well. And that idea that I think if you take the worst of it, where you have a charitable trust, where you have a set of investments that are really trashing the world and causing some big social issues, but you're focusing very much on your grants, means that at the level of the charitable trust, you're a net negative rather than a net positive. I think that seems like, because of this push through of social impact investment, it is going to become more and more untenable, that situation. And so the idea of having both your grants and your investments doing good, so as a total portfolio impact, I can just see raising itself in prominence. And then the other bit about acceleration, and it'd be good to, Alana, to get your take on this, is I've seen a lot more people talking about the UN Sustainable Development Goals. And so with them being up against 2030, that creates a time pressure. It means that you are solving these things and you're trying to do them actually over the next decade. So expediting your efforts, getting in there as soon as possible. Almost as soon as you start talking SDGs, it's how do you get going now, rather than if you're creating something and it's around what happens in your will, you sort of missed the cut-off point, hopefully.
Yeah, right.
So, I mean, the SDGs are so powerful as a tool and a mechanism for motivating people to get involved, to do something good with money that they have some power or control over. The great challenge of them, in my view, as an advisor, is that they almost by necessity require a foundation or a philanthropist to collaborate with others, or to be in a collaborative sort of, universe. How are we all sort of getting towards these goals is basically the question. You can't really do an SDG thing that is functional and effective on your own. I mean, that's the reality of it. Many funders and foundations thrive on that and find that exciting. But you will find, I'm afraid, that there are some that are not, that they, perhaps it's not for any, bad reason or nefarious reason, but they just can't find their spot really in the ecosystem of all of those in the universe who are trying to go towards the SDGs. And that's a bit unfortunate, I think, because I think there are people who would embrace those goals were they framed in a slightly different way. I don't have an easy answer for that. I tend to push clients to get over that because there's so much good that can be achieved. But at the same time, it is a function, first of all, of fitting into a pre-existing mechanism, one that is hugely challenging, and as Rennie is saying, is imminent, right? Is time pressured. That's all the reason why we should all be doing more for them, not avoiding them. But I'm afraid I do see that challenge sometimes, and I see that there will be funders that sort of pick something a little bit different, so that they're not under that pressure to be a tiny part of a larger thing that is very pressurized. That's a sad take, I'm afraid, but
no, that's the reality is what it is. But let me pick up on that and to start to pivot to sort of more forward-looking as well on this same theme. We've got a fairly large climate conference coming up, global climate conference hosting here. As the pandemic has been a bit of a catalyst, and you've been talking, both of you, about some of the actual manifestation of that focus. To what extent do you believe that this could be a further point of focus, sort of tying into the SDGs you were just discussing, and especially since we're mostly we're thinking globally, but we're acting very locally here in terms of philanthropy and charity and social impact and impact investing. We're hosting this year. Is there much reason to think that this could be a further catalyst for more immediate impact action?
I think hosting it does raise the bar, and one of the things, if you're talking about climate change, individual actors can only take it so far, and you do need government support and you need regulation. You need that other side of things, and so I actually do feel that COP26 could be quite sort of stimulating a seminal moment for what's happening, certainly within the UK. And people will say, well, the UK, it's sort of 4% of global pollution, why does it matter? I think it does matter. I think raising the bar as high as you can and being exemplar is absolutely critical, showing what's possible. And so I'm actually quite enthused about what should come out of the climate conference towards the end of this year. And having a supportive government then gives the confidence for others to act underneath it. And so, yes, mate, we'll see. Maybe we should do a roundup afterwards to see whether all hope's dashed. But at the moment, I'm going into it with optimism.
Excellent. That's good. The time is ticking by quickly. I did want to come back to the question that I said I had put aside in terms of some thoughts that either of you might be able to share on the broader topic of, now that that there has been so much being done and so many more people hopefully doing it and more money flowing and so forth, as that awareness is being raised, some thoughts around getting involved, whether as an advisor to come up to speed to how to help the clients and donors on their journey to be effective and to figure out their needs are and get them fulfilled. If you're an organization, in terms of raising funds and allocating them, just it'd be useful from the perspective each of you have, if you have a couple of words about, great, how do people involved help other people get more involved?
Let me jump in on the advisor piece if I can. I see this happening on two levels, and the one, and I encourage any advisor on the call to sort of, have this conversation with themselves. The one level is, what am I doing myself as an advisor? And on that, I absolutely, I feel almost evangelical about our considering our position of neutrality in relation to the ecosystem. If you are advising people whose views you don't agree with, we've all been there, but at the same time, there is this studied neutrality that advisors often take on, and it doesn't necessarily need to form the parameters of how you interact with giving. Let's put it that way. So that's the personal level for advisors, personal, professional. But at the same time, I would encourage anyone who works as part of a firm or indeed owns their own firm to look at it on that level as well, the organizational level of the advisory organization. If you still have people in your law firm or your accountancy or investment firm who are not on board with giving being a holistic part of wealth planning, get a training session going internally, like tomorrow, plan that, because we've been doing it for 10 years plus at Withers, having this internal training. And I think by now we don't really have people who are, not convinced, but I always remember this one attorney who wanted to say to me that it was too private to discuss. And if that, we have to weed that out. So I say at the personal, examine your own position in respect of neutrality. At the institutional advisory level, look for pockets of resistance to the idea of giving and social investment being a holistic part of wealth planning, and root those out at the roots.
That's great. And Rennie, you've been hugely involved in galvanizing organizations, your own organization, this organization, individuals. I'm sure you have a lot to say on this as well.
I think one thing that has shifted over the last 18 months is the practice of philanthropy and social impact investment. I think there are new bits in the toolkit. There are new things which are needed, and there are approaches that were nascent and are beginning to take root and are extremely important. One of them being the use of unrestricted funds. And I think getting advisors that are confident, able to embrace this new bit of a toolkit and really bring their clients, their customers through in terms of understanding how transformational these types of grants can be made is just a pocket of things that have shifted in the last year and a half. And so feeling that you knew what you were doing going into the pandemic, all I'd say is there have been some new things which have emerged. It's worth dipping back in and really, really almost challenging those conceptions, challenging that practice, and trying to see if there are additional things that can improve impact and effectiveness.
That's excellent. I know we're coming close to the end of the hour, and I think John's going to come in a second, but before he does, in our preamble conversations, something that came up that I'm not sure we've voiced here, and it's worth someone just saying a quick comment about, was the importance of unrestricted versus restricted funds and funder flexibility, and maybe just pick up on that point for the benefit of those that weren't here before we went live.
Yeah, so Rennie's just mentioned unrestricted funding, and I think it's sort of a truism. We all know that it's important, right? But I do think, exactly as Rennie is suggesting, that there has been, you know, a sort of increased interest in funder flexibility, and it is so important. I would encourage folks to have a look into flexible funders, which is a hashtag that a number of funders in the UK, this is a UK specific sort of initiative. I know the numbers were at least, you know, above 50 funding foundations. Some of the major ones in the UK had signed up to this. Go and have a poke around about that. And trust-based philanthropy is a sort of analog in the UK, sorry, in the US, that is looking about, you know, really questioning that the assumptions that we make in respect of funders or as funders around control, around monitoring and reporting, and of course around restricted purpose versus unrestricted purpose. My own view is that lots of foundations fall really unintentionally into the practice of requiring more than is necessary of their grantees, and thereby sort of really controlling and sometimes hobbling them almost by forcing them into certain patterns of reporting that are really more than is necessary. I'd encourage everyone to check that out.
Thank you for that. I'll add a quick footnote also, knowing that John's about to come on, just that what I'm experiencing as an advisor on the wealth side is that it literally a week isn't going by now without someone asking more about what their money is doing, what impact it's having. So separate from I want to do impact investing or I want to do sustainable or ethical investing and all the nomenclature around that and helping people through that process, which we do anyway, there's a lot of people who are saying, well, what impact is it happening, right? Recognition that the allocation of capital, no matter what you do or what you don't do, is having an impact. And the fact that you don't know what it is or it's not being measured doesn't mean it isn't having an impact. And clearly the calamities we've seen around the world over the summer and last few months has helped to bring that to bear in a much more dramatic way. And suddenly it's all very real and it's everywhere. And it just feels like that conversation is happening now kind of all the time, which is great. It's a good opening. Hello, John.
Hi. Thank you very much, George, Renee, and Alana. Listening to this, we think back to what it was like 19 months ago and how we were sort of encouraged, but also wondering what was going to happen. And to hear how encouraging this is, even though you're realistic about some things, it's still really quite encouraging what you're saying, especially, George, what you were saying at the last second there. So welcome back, everyone. So could I have final words of wisdom, 30 seconds? Can't give up tradition. So Renee, would you like to start off, please?
I think my words of wisdom, whether we can quite term them that, but things have shifted in the last 18 months. I think it's definitely worth checking in. People are always very happy to explain their practices, what they're doing, and go out to experts and check in with them. Because I think as an advisor, there are some options to maximize on impact.
Great. Alana.
Yeah, super. I think I'd say we're in a time of huge disruption and at a time when we're all sort of alienated and distant from each other. This is totally the time to lean in and become more engaged with your clients, with other advisors, with networks, with philanthropy and social investment collaboratives, that sort of thing. Don't pull back from this, lean into it.
Thank you. You mentioned the word professional fatigue a while ago. It doesn't sound like all three of you are feeling that at all. So quite exciting. George, final word to you before we turn over to Sophia.
Thanks, John. I think I'll pick up on what Alana was just saying, because that dislocation and disruption we've all felt has caused everyone, both professional advisors and people of money and so forth, to just rethink everything. What do I care about? How do I allocate my time? How do I work? What do I work? What is the value of everything? What is the value of my money? What does it mean? And it's a phenomenal time to be having really engaging conversations about all that, and then providing some frameworks to help people achieve what they actually value with their wealth.
And training helps with the advisors, picking up on what Alana was saying earlier. We won't do a commercial though. Okay, thank you. Sophia.
Thanks, everyone. That was brilliant. That's just what we wanted. So thank you for taking the time to be with us today. We are now back to a full lineup of events, so please do check out our website to see what's in the pipeline. Our first hour-long interactive webinar will be on the 23rd of September, where we'll be exploring sustainability in the fashion industry and the role of impact ESG investors and philanthropists. Our Walk in My Shoes is back next week, same time, where we'll be discussing strategic thinking in philanthropy, how donors can be encouraged to take greater risks for better and long-term impact. I hope to see you all there and have a great week. Thanks, everyone. Bye.
Yeah.